Sonata Software, a company which is embarking on a good growth story and has seen a good run up in the last 1 month. To understand what the recent acquisition means for the company and what's the growth path that the company is looking to take, joining us on the show is Mr. Jagannathan Chakravarti, CFO at Sonata Software. Welcome to the show, Mr. Chakravarti. I am Hiral Daria at BQ Prime.
Thank you for this opportunity to BQ Prime. Good to have update to the business world through you.
Absolutely. Always a pleasure to speak to you. Mr. Chakravarti, my first question coming to you overall is that this is one of the largest acquisitions that Sonata has made with regards to Quant. Firstly, what's the rationale? Because clearly in the previous analyst call as well, we've clearly indicated that IT services is something that we want to grow as a business vertical from here on. If you could help us understand the strategy and the acquisition dynamics.
Yeah. Thanks for this opportunity, Hiral, once again. My CEO was articulated last quarter in the analyst call that we want to double our revenue in 4 years' time. So that's the objective. We become a $500 million company over the 4 years' time. And we understood what is our strength and what can be better for us, our focus areas, what we want to focus in the coming growth area. Our strength always has been the Microsoft space, particularly the dynamic space, has been very, very strong pillar for us. But the other vertical, particularly on the new age services in the other cloud as well as other services, we thought we have to have a kind of an investment. And we were very, very clear the M&A is not going to be only for the size. It is going to be exactly focusing on strategy, what we want to take to grow and achieve the objective of $500 million company. To meet the requirements, we have acquired this company because it serves both the purposes of the strategic focus area as well as it helps us to get the fast momentum as well as the size. This company brings to us major services. This company brings to us is data analytics. Enterprise data analytics is very key area in this their services. They bring in to enhance our focus on two verticals. That is BFS as well as on the healthcare, which we have added the new vertical now. So these two verticals are going to be our focus area for driving the scale and the growth. So this company acquisition brings that two major customers for us in this two verticals, and it's going to accelerate our expand, deepen, and accelerate our growth in these verticals. The third element of this comes in is the kind of the services what they offer to us. So we bring in this brings the fast growth as well as the vertical as well as the services what we bring. We want to focus for the customers what we go in for. So it's very, very focused and very important for us strategically.
Right. So overall, currently, from what I understand, IT services contributes around 30% of the revenues, whereas product licensing and deployment is remaining 70%, right? Now, when we're looking to double our IT services revenue and with the acquisition that has come in, which already gives us access to the verticals we want to grow in, how does the revenue mix change for the company in the next, say, 12 to 18 months?
Yeah. This, as we mentioned, this is like a 3-year to 4-year plan for the IT services to become $500 million. And we want to grow, ahead of the industry, very, very clearly ahead of the industry, which we articulated particularly for the next 12 to 18 months of growth. We don't give a specific number guidance. Okay, we have grown last year by about 17% organically, and we expect to grow more faster than that. That's what our target has been, and that's what we want to grow also in the IT services space. In the India business, as I've been not telling through my earlier interviews, these two businesses are two different rhythms. They have a strategic benefit to us as a relationship with Microsoft, but they are in two different businesses. And for our statutory purposes, we consolidate this result of these two businesses, but they two are different. The India business has to be measured on absolute amount of gross contribution what they make and not the turnover alone. Here in the international business, it's like any other software company with revenue in dollars plus EBITDA margins are the key measurements for this. This business, we expect to have a more momentum and grow faster than what we have grown in the past.
Right. So overall, we've said that the acquisition will contribute almost one-sixth, which is around 16 to 17% of the company's overall revenue. So will we see this contribution from FY24 onwards itself?
Yeah, this will be, in fact, FY23 will have a contribution from this acquisition. We'll be closing anytime in the next 2 weeks. Expected to closure, although we have mentioned 30 days time, we expect it to be closed in the next 2 weeks kind of time frame. And once it comes in, at least some portion of the revenue contribution will start coming from this year itself in
And any
FY23.
estimates in terms of how much are we expecting in FY23 itself?
FY23, it's a question. It varies from 15 to 20 days of revenue. I'm not able to specifically call out on this. If they are at 37 million and the quarterly run rate they have, is about $9-10 million is what the quarterly run rate. So $9 million into whatever the contribution for 15-20 days. It depends on the closing date.
Right.
So
And right. And overall, with this acquisition, we've said that already two of the top five clients from day one is what we've got, right? And both the accounts have a digital spend of almost $1+ billion each. So taking that into consideration, what's the kind of revenue run rate we're expecting from next year onwards?
Yeah, we have clear. On Friday, we had a call with both me and my CEO had a call with the analyst. We have what we have called out is this company is expected to grow in the low to mid 30s kind of growth they will have, as well as their EBITDA will be low to mid 30s. That's the expectation for us in the next 3 years. The growth expected from this company.
Right. And from a funding perspective as well, we mentioned clearly that $65 million will be paid upfront, which will be through a short-term debt, which will be paid in the next 12 to 15 months, right? But apart from that, there could be some additional payments beyond the $160 million that could be given if we're achieving additional targets. Now, firstly, if we could quantify the same for the investors.
Not very substantial amount. It is like a more like a more like a booster given to the deal kind of a situation. We don't expect any substantial amount to come out of that. It's a very small amount, which is like a added booster or move to the entire scheme of things. So we can't quantify. It depends on the performance and it depends on what they achieve in the next 2 years. Depends on actual performance over and above the stretch target what they already have. So this we are not able to estimate at present clearly, but this is like a booster which is given to the deal, and it's not going to be very substantial.
Got it. Apart from that, Mr. Chakravarti, overall, the entire acquisition also helps Sonata in commanding a better pricing, right? Because clearly, in terms of quant systems as well, which is led by data analytics, data engineering, they are already commanding a premium billing rate. Now, currently, how much is the premium as compared to what Sonata actually commands? And two, in terms of by how much will it help us actually increase our billing rates?
Okay. Our billing rate it depends on customer to customer. You can't just take a brush and then whitewash in all the other customers. Also, it's very difficult. But what brings in their rate is their lowest rate is highest rate for me, on-site rate. So that's the kind of a difference what we have between these two companies. They have a premium rate because of the premium digital services what they give it to the customer.
Right. But on an average, by how much will our utilization per employee improve then?
No, their utilization is pretty high. Our utilization is already high, but their utilization is pretty high because they have a different model. They are like a consulting company. They are consultant company turned technologies consulting company. And hence, the competition is with Accenture and Deloitte of the world. And so this company will have a model of how much hours the person bills and how much hours is the kind of, instead of having a full time of an employee deployed in a project, he will put only a couple of hours in a project and he will do other projects in the remaining time type of it. So their utilization tend to be higher than the industry average.
Right. But do we have a range or an estimation in terms of by how much will our utilizations improve on a consolidated basis?
Their number of employees is not very high as such. Although the revenue is going to be like 1/6 of the revenue, their number of employees will be less than 10% for us. We are about 6,000 people. They are 5% kind of a thing. So I'm not saying like 1 or 2% increase in utilization is possible, but this is not going to substantially change our overall utilization.
Got it. Got it. Apart from that, overall, if you see in terms of the BFSI and the healthcare vertical, now we will see cross-selling opportunities as well, right? Now, is there any major overlap in business that we are seeing, or it will be a pure play cross-sell opportunity for Sonata?
This is like a great compliment for us because
Mm,
it's not that there is many overlaps on this. Although we have BFS services, this space we are entering into is more like fintech and other financial services space, which is very complementary or additional to us in the space. The other healthcare sector we have present, but we don't have the depth what these teams this company has. So that's definitely a new entry which is expanding, deepening our offering to these two verticals.
right. And overall, apart from this, overall, does this give us an opportunity to actually get longer tenure contracts versus the platformation business that we have currently?
Anand, I didn't get your question. Your voice was
No, I'm
breaking.
saying overall from a deal wins perspective, right? Does this acquisition give us an opportunity to get a longer tenure contract with any of the clients versus the shorter term contracts?
Yeah, this actually definitely gives a longer term contract for us because the customer relationship what they have is very deep and very
Hmm.
widespread also with two major customers. They have a very deep relationship, and definitely this is helping us to increase the tenure of the contract for us.
Right. And like the way we've looked at inorganic growth by acquisition of Quant, uh, are there any other inorganic growth opportunities that we're scouting for? And if yes, which are the verticals that we should be looking at?
Okay, we will continue to look out for an inorganic growth opportunities as we mentioned very clearly. We want to double the organic revenue what we get from the company, and the rest of this for $500 million travel has to come from inorganic option. So we have done one part of that inorganic option. We'll continue to look for a company, but we are not going to get a company only for the revenue sake or for
Correct.
the kind of the size what they bring in. We are going to looking for a strategic fitment. Our focus is going to be on cloud and data, and anything comes with cloud and data, particularly in healthcare and BFS segment, will be the focus area for us. We will wait and see how this is evolving. Maybe one vertical, two verticals. It can be retail and healthcare, or cloud and
Mm.
BFS and healthcare and retail. Any of those things can happen, but we will keep this together. No, we will keep looking out for the opportunity for an inorganic growth.
Right. And what are the geographies that we are going to focus on from here on? Because, clearly after the third quarter numbers, the anticipation, in fact, earlier before the third quarter numbers was that there will be a slowdown in the US. Europe could be a concern, but that does not seem to be the situation for IT as a sector right now because the management commentary across the industry was pretty strong post third quarter. According to you, how is that trend panning out now? Because we are almost at the fag end of the fourth quarter.
From the third quarter, second quarter, third quarter, whatever is the time, we are ground level. We have always been positive, and we said our pipeline doesn't reflect that.
Correct.
Now, when the recessions are what recessions in the past has given us, there'll be negotiation, discount rate, their contract and closure tenure will time frame will go up, the contract will may get cancelled. There can be no redeployment of the resources.
Mm.
Many of these things are the indicators of recession. They were not there. The win loss ratio remained at the same level in the ground at the ground level. That's where we were very positive that this does not reflect the situation of a recession for us. And we are very positive even today. The recession is not in the ground level for us. We are
Mm.
positive, still continue to be positive, and we believe with Quant we are definitely going to have a good positive quarters in the coming days.
Right, absolutely. And that's what the growth story implies. My last question coming to you is from a shareholder value creation perspective. Overall, taking into consideration the acquisitions that we are looking at, there could be future acquisitions in the pipeline as well. How does the dividend payout policy change for the company? Are we expected to see for any moderation on that front? And if yes, to what extent?
The current situation, what we have made an estimation on the cash flow and all, we think that we will maintain the current absolute dividend amount. As a percentage of profit, it may fall, but as an absolute amount of dividend, there is no plan to reduce that. But we will do a re-evaluation of the current situation and cash flow and other opportunity that comes in, and discuss, take it up with the board, and with their approval, whatever is as per the advice of the board, we will take it forward on dividend. At present, there is no plan to reduce the absolute amount of dividend.
Got it. All right. Thank you, Mr. Chakravarti, so much for joining us on the show. Congratulations on the acquisition as well, and good luck for any upcoming opportunities that you would be exploring, and for the kind of growth that we have been seeing in terms of the company. Stay safe and speak to you soon again.
Thank you. Thank you. Thank you.